the boards have approved a revised merger scheme. Mangalam Maloo joins in with all of the details on what the dilution could be and what the feedback is from the market on this revised merger scheme. Mangalam, over to you.
Well, both the stocks are seeing a relief rally after this renegotiation has been announced. But tell you what, the revised ratio is 1 share of Zee Learn for 1 share of Treehouse. Just a few months ago, this was 5.3 shares of Zee Learn for 1 share of Treehouse. Since then, the prices have fallen for Treehouse itself. When the ratio was announced, it was 206 rupees as far as this Treehouse CMP is concerned, while Zee Learn was trading at around 41 rupees. And since then, we've seen an 85% decline in Treehouse's prices. Now, the biggest reason why are a couple of them. The first one is the financial performance deterioration that we've seen in Treehouse's numbers over the last 2 quarters. At the same time, the cash on their balance sheet eroded from 151 crores to about 22 crores between September as well as March. But more importantly, it was the actions of the promoters and some corporate governance issues which came by, which have spooked the street. For instance, before the company announced the merger with Zee Learn on December 3rd, both the promoters, Geeta and Rajesh Bhatia, sold about 9.5% stake in the company. Secondly, after releasing pledge on their entire shareholding on December 17th, they went ahead on March 12th and repledged their entire stake. So that reeked of some sort of corporate misgovernance. Other than that, Zee Learn is buzzing in trade today because the investors believe they are paying 1/5 of what they were asked to pay about 6 months ago. But then again, we need to keep in mind that the prices have so corrected that it is what they're paying. But at the same time, while they're paying 1/5, they're also getting much lesser, because if you look at it, over the last 2 quarters, Zee's operational performance, Zee Learn that I'm talking about, has increased a lot. In the last 2 quarters, their EBITDA has been closer to 25 crores, while Treehouse has seen EBITDA losses in the last 2 quarters. So with a dilution of close to 12.6%, they will get a loss-making company. At the same time, the cash that they were supposed to get off to the tune of 151 crores has now come down to 22 crores. But as of now, both the stocks seeing a relief rally.
Yes, absolutely.